Good morning and welcome to Dark Gamma's pre-market analysis for April 8th, 2026. Samantha here, and Billy, we are opening this Tuesday with a massive bullish gap on the SP 500, currently sitting at 6,793 against a previous close of 6,616 and 85 cents. That is a gap of 176 points to the upside, roughly 2.66%. This is not a quiet open, folks. The market is screaming something loud right out of the gate.
Absolutely, Samantha. And the key word here is context. Yes, the gap is bullish and aggressive, but let's talk about where we are relative to structure. Max Pain sits down at 6,595. We are trading nearly 200 points above that level pre-market. That kind of deviation from max pain tells us options market makers are going to be under real pressure today. The gravitational pull towards 6,595 is significant, but it takes a sustained move lower to close that gap.
And Billy, that brings us to the expected move for today. Dark Gamma has the range defined between 6,531 and 6,702, based on an expected move of 85.3 points in either direction. Here is the striking part. We are already trading above the upper bound of that expected range in pre-market. That means implied volatility priced in overnight simply did not account for a move of this magnitude. We are in uncharted territory relative to today's options pricing.
That is a critical observation. When price opens above the expected move ceiling, gamma exposure dynamics shift dramatically. Market makers who sold options expecting price to stay within that range are now caught offside. We could see amplified moves in either direction as they scramble to hedge. Traders need to be especially cautious with 0 days to expiration plays today. The risk of violent reversals back into the expected range is very real, particularly toward that 6,700 level, which was the top of the defined range.
Now let's talk about what is driving this gap, because it is not coming from nowhere. Technology is the top performing sector this morning, up 3.92%, and the Magnificent Seven are all green across the board. Meta is leading the charge, up 4.9%, Tesla right behind at 4.26%, Alphabet up 3.61%, Nvidia 3.55%, Amazon 3.51%, Microsoft 3.29%, and Apple rounding out the group at 2.37%. That is a synchronized lift across the entire mega cap complex. This is institutional money moving.
And on the other side of the ledger, energy is the weakest sector, down 4.43%. That kind of divergence between technology ripping higher and energy getting crushed tells you this is a risk-on rotation, not a broad market rally. Money is moving out of defensive and commodity-linked names and into high-growth, high-beta technology. The implied volatility environment is still elevated, so this move could be unwinding some fear premium built up in recent sessions.
Bottom line for the Dark Gamma community this morning, the SP 500 is gapping well above both its expected move range and max pain. That sets up a tug-of-war between bullish momentum fueled by mega cap technology and the gravitational pull back towards 6,595. Watch 6,700 as your first key resistance. A rejection there could bring us back into the expected range quickly. Stay nimble, manage your size, and let Dark Gamma's levels be your guide throughout the session. Billy, great work as always. On today's macro calendar, the main event is minutes of Fed's May FOMC meeting at 2:00 p.m.
These releases could drive volatility at the S&P 500 open.
Across the board strength is the story this morning, with all 7 megacap tech names pushing meaningfully higher ahead of the open, the group collectively pointing to a strong risk-on session. Meta is leading the charge, up nearly 5%, while even the laggard of the group, Apple, is still trading up over 2%.
Tesla and Alphabet are both impressive runners as well, each up over 3.5% to 4%, which suggests this isn't just a narrow artificial intelligence hardware rally. It's broad-based buying across the entire mega-cap space. Nvidia is right in the mix too, up 3.5%, reinforcing that the artificial intelligence trade is very much alive.
Worth flagging that the attack on the Lavin oil refinery in Iran this morning is adding a layer of geopolitical uncertainty to the macro backdrop, which could create some intraday volatility even against this positive pre-market tone. Microsoft and Amazon, your more defensive growers in this cohort, are both up around 3 to 3.5%, which tells you the bid is real and not just speculative froth.
The overall tone for the tech sector looks constructive heading into the open, but traders will want to watch whether this pre-market momentum holds once volume picks up, especially with geopolitical headlines capable of shifting sentiment quickly. Apple remaining the relative underperformer at just over 2% is something to monitor, as it often signals where institutional conviction is thinner within the group.
Kicking things off with Delta Airlines dropping results before the open, a $42.9 billion industrial name, carrying a beta of 2.0 and a 6% expected move. That kind of high beta setup means the market is pricing in a wide swing either way. RPM International also reports pre-market, but at 12.4 billion with a beta under 1. It is the quieter print of the morning.
After the close tonight, Constellation Brands is the one to watch at 26.7 billion in the consumer defensive space, but that low beta of 0.38 makes the 4.7% expected move feel unusually large relative to its typical behavior. Applied Digital and PriceSmart also report after hours, with Applied Digital standing out for its 12.7% expected move, despite being a smaller name.
Pivoting to tomorrow, Neogen headlines the pre-market session at 2.2 billion in healthcare, sporting a negative beta of negative 0.19, which means it tends to move against the broader tape. Pair that with a 5.9% expected move, and it is an interesting hedge candidate. BlackBerry and Simply Good Foods round out the pre-market names, with BlackBerry's 8.3% expected move drawing attention given its elevated beta of 1.34.
Tomorrow after the close, WD-40 tops the session at 2.9 billion with a nearly flat beta of 0.11, making its 4.2% expected move essentially idiosyncratic to the earnings event itself rather than macro-driven. Simulations Plus and ClearSign Technologies are microcap names with limited open interest likely, but ClearSign carries a beta of 4.23, which makes even a small macro move a potential outsized event.
Breaking overnight, Iran's Levan oil refinery took a hit around 10 this morning local time, and that geopolitical shock is going to put immediate upward pressure on crude at the open.
Absolutely. And the simultaneous report that the Trump administration is looking to cut Iran war funding adds a contradictory signal, which means we could see some serious volatility in energy names as traders reprice the risk premium.
On the derivative side, watch for elevated gamma exposure around energy sector strikes, and 0 days to expiration contracts could get extremely active if crude spikes hard in the first 30 minutes.
The broader SP 500 open interest is clustered around key levels that may not hold if energy volatility bleeds into the index, so I would expect market makers to lean heavily defensive heading into the first hour.
An IPO, or initial public offering, is when a private company sells shares to the public for the first time, allowing everyday investors to buy ownership in that business.
Today we have one company making its debut on the markets, Metals Royalty Co. Inc., trading under the ticker TMCR on the Nasdaq Capital Market.
They are bringing 55,061,113 shares to the public, which is a substantial float for a metals royalty company.
The offering price has not been finalized yet, so traders will want to watch closely at the open to see where this one finds its initial footing.
Scanning the nearest strikes to spot at 6,793, the 6,800 call leads nearby call open interest at 10,658 contracts, up 333.78% overnight. And the 6,780 call is right behind it with 10,988 contracts, surging 380.24% day over day.
Those back-to-back explosive open interest builds at 6,800 and 6,780 tell me dealers are getting heavily positioned right at spot, which stacks resistance tightly in that 6,780 to 6,800 corridor and could create a gamma exposure ceiling that pins or repels any morning push.
On the put side, the nearest meaningful open interest is actually far removed from spot. sitting at 6,300 with 18,186 contracts, up 876.17%, suggesting traders are not hedging a slow drift lower, but rather buying deep tail protection against a sharp dislocation.
With max pain parked all the way down at 6,595 and no significant put open interest between spot and 6,300, there is a wide air pocket below that offers very little structural support until that 6,300 level. So the tape is essentially pinned between a dense call wall just above at 6,800 and a distant put floor nearly 500 points lower. Understanding the gamma structure is key. Flip gamma sits at 6,595.
Above 6,595 market makers are long gamma. They stabilize price. Below that level, they're short gamma, which amplifies moves.
The call wall at 6,800 is the strongest resistance today. Heavy call open interest forces dealers to sell into any rally there.
The put wall at 6,595 is the key gamma support. Dealers are forced buyers below that level.
With S&P 500 at 6,793, we're above the gamma flip, a stabilizing environment heading into the open.
Big money leaves traces. The highest liquidity concentration over 1 year sits at the 6,844 level, above current price, with maximum liquidity concentration over 39 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 6,729 level, below current price, with maximum liquidity concentration over 1 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 6,793, above the gamma flip at 6,595.
1 sigma range, 68% probability, goes from 6,532 to 6,702. 2 sigma, 95%, extends from 6,446 to 6,788.
On the GAX side, call wall sits at 6,800 structural resistance. Put wall at 6,595 is where dealers become forced buyers.
The top institutional whale levels nearby are 6,658 and 6,733. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking now from the dark gamma institutional scanner, 4 new large entries were flagged today across the options market. The headline print is Micron Technology, ticker MU, where nearly 19,000 new open interest contracts were detected on the $400 call strike expiring May 2026. The premium deployed totals $43.58 million, with 67.5% of the flow hitting the ask, a classic aggressor signature. Right behind it, Palantir Technologies, ticker PLTR, saw 12,810 new contracts on the $150 call expiring June 2026, costing $18.5 million and printed at 98.5% of the ask. That is an extraordinarily aggressive fill, Billy.
Absolutely, Samantha. Rounding out the new entries, Canadian National Railway, CNI, saw over 11,000 new call contracts at the 115 strike expiring October 2026, with $4.25 million in premium and a staggering 99.5% ask print. Microsoft, MSFT, also appeared on the scanner with 5,803 new call contracts at the 450 strike, August 2026 expiration, $4.15 million deployed at 99.2% of the ask. So across all 4 new entries, the flow is exclusively in calls. Sector concentration here is clear. Semiconductors, enterprise software, and transportation infrastructure are all drawing institutional attention simultaneously.
Now turning to confirmed flow. Contracts previously flagged by the scanner that have now seen open interest grow by more than 20%. NVIDIA, the 185 call expiring May 2026, added 8,336 contracts with 4.35 million in additional premium. That confirmation tells us the position is being built, not closed. However, the contrasting signal comes from Intel INTC, where 16,496 new open interest contracts were confirmed on the $50 put. Also, May 2026 expiration, 9.15 million in premium at 72.4% of the ask. That is the only bearish directional print in today's entire scan, and it stands out given Intel's position within the same semiconductor sector, seeing bullish flow in Nvidia and Micron.
To summarize the session, the institutional scanner captured 6 significant prints today. 5 are calls and 1 is a put. Semiconductors dominate the flow, appearing 3 times across MU, NVDA, and INTC. Enterprise technology adds Microsoft, and transportation rounds out the picture with Canadian National Railway. The overwhelming directional skew in today's scan is to the upside, with the sole bearish outlier concentrated specifically on Intel. Total estimated premium across all 6 prints approaches $84 million. Expirations cluster in the first half of 2026, suggesting institutions are positioning for moves over a horizon of roughly 6 to 12 months. We will continue monitoring open interest developments on all flagged tickers.
Breaking news here on Dark Gamma. Our institutional flow scanner has flagged a significant new contract entry today on Micron Technology, ticker MU. The detected position is a call option with a strike price of $400, set to expire on May 1st, 2026. Total premium registered on this flow comes in at $43.6 million, with current open interest standing at 22,596 contracts.
That is a substantial flow, Samantha. To break down the activity further, volume registered at the time of detection reached 22,756 contracts. The institutional entry price, meaning the average premium captured by our scanner at the moment of detection, was $19.15 per contract. Of the current open interest, 18,991 contracts are flagged as new, indicating this is a fresh position entering the tape today.
Now here is where the tracking setup becomes particularly notable, Billy. The current contract price as of now sits at $18.75, which places it below the institutional entry price of $19.15. In flow tracking methodology, when the current contract price is near or beneath the detected entry price and open interest remains flat or continues to grow rather than unwind, that configuration is referred to as an ideal tracking setup. It suggests the position has not been exited and the premium paid remains close to the original cost basis. Open interest here holds steady at 22,596 contracts, consistent with that framework.
And rounding out the data picture, Samantha, the underlying break-even price for this contract at expiration is calculated at $419.10 per share. That represents the price level at which MU shares would need to be trading on May 1st, 2026, for this contract position to reach break-even based purely on the strike price and premium paid. That wraps our institutional flow report for this entry. Stay with Dark Gamma for continued market data coverage.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.